All right, welcome back to Trading Corner here at Onyx. We were bearish, price went down, feeling kind of good about it, but also it's a bit unclear whether the market's going to keep spiraling into the abyss or level out or maybe even cause a painful short covering rally.
Yeah.
What are you seeing in Dated?
It's a tentative time. I mean, you know me, I hate being short, but, you know, as we've spoken about for the last few weeks, it is calling for it. It's really hard for bulls to be in this kind of environment. So, yeah, I mean, Dated especially, it's quite unforgiving when you're max short, to be honest. So we have seen that this week as well, you know, sell-offs kind of accompanied by small rallies. Any kind of small pockets of demand that you see in the physical, you better be sure it's going to be an excuse for people to get long, especially when the majority of the market is short, and try and catch those few people out. We haven't had anything super aggressive yet because it feels like we're very much at the start of the sell-off in Dated. We are getting kind of little, you know, pockets of people buying here and there. So, you know, it always makes it that much harder to be short or to be in a position when you know the market's in that position already.
Yep.
So we are seeing a little bit of that, but, you know, you can't deny the flat price. We've got APPEC this week, you know, was it right, everyone's here, we're at the pub, let's put some pressure on flat price. I mean, it was quite a decent sell-off, right? Through 70 for the first time in a few years.
Yeah, we broke the range. It's been a while. I think 2021 was the last time we saw these prices. And, you know, the fundamental picture behind this sell-off is really well telegraphed. Like, it's no secret that physical's weak. If you look at CFTC data, if you add up Brent, TI, heating oil, gas oil, and RBOB, I don't know if we're the shortest we've ever been in terms of managed money net length, but certainly in over a decade hasn't been this short. So
I definitely think you're right. I mean, especially as I said with APPEC this week, you know, you're getting a lot of the big trading house CEOs coming out suggesting where they think the market's going to move, and I think across the board it was unilaterally, you know, we are not in an environment of $80 barrel oil anymore. It's more looking like $60. And so a bit of it becomes fulfilling. You know, I remember when I went to APPEC last year, it's so hard not to get caught up in everyone's trading chat. I think last year everyone was talking a bull play, and, you know, the more you talk to traders and they're spinning their yarn, you get caught up in it. It's so easy. So you come back home and you're like, oh, let's buy or let's sell, whatever the consensus is. But it's a really dangerous thing to do because obviously everyone's talking their own book, right?
Yeah. And we are primed for a short squeeze. Like, the market's just never been this short. So what's the anatomy of a bull play in Dated? Like, how long does it take the participants to sort of accumulate enough cargoes to go for it with the spreads? Because I think the spread sell-off and flat price, spreads haven't sold off too much. We're still in decent amounts of backwardation despite the physical weakness. But flat price, like, sell-off's getting a bit long in the tooth.
Yeah.
And a flat price spike could lead to a spread spike. So how much physical needs to get accumulated before you'll see participants start to go for the spreads?
I think justifiably 2 VLCCs.
Yeah, it's
you
not
don't
much.
need much, really. Not at all, especially when we're talking about marginal barrel.
Yeah.
So, you know, when the market consensus is one way and you get a small amount of physical flow that's the opposite way, whoever gets that first call, you best bet they're going to be buying the derivative contracts.
Yeah.
You know, so we're seeing a little bit of this now. I mean, I don't know if anything's really been booked yet, but we've had a couple of trade houses come out and suggest that they maybe want to get long a bit of structure currently where the curve is. And given the state of the market, how everyone's talking, how bearish everyone's indicating it is, you can only really think that chat comes from they've booked something.
Yeah, absolutely.
Or there are suggestions that they're going to book something at some point. Now, you can't really talk about Dated anymore without talking about TI. I mean, really.
And that is the marginal barrel right now, isn't it? It swings to all 3 major regions. It's available and it's oddly tight.
It's so, incredibly tight. I mean, you look at Cushing, well, firstly you look at the TI spreads, the draws that are coming out. So we just had the APIs come out last night. It was looking like, I think, around 2 million draw in Cushing.
2 and change, yeah.
So, you know, you're looking at this small area in Oklahoma, prices out all the TI, all of the TI cash, it's, you know, it can be disproportionate, as is everything with the swaps market, I guess, but you can't ignore it, especially into dated. So we have that, we have the threat of hurricanes, TI Brent is performing particularly well. You know, you have to see that this is going to have some kind of knock-on effect on dated.
It would have to. I mean,
Have to.
I'm not a TI expert. I've never really operated a tank at Cushing, which is basically what it takes. But I mean, one thing that can be said about TI, it's been tight for a while. The hurricanes are hitting, or the storms, or whatever you call them, are hitting platforms right now, which curtails production. But it looks like pretty soon that storm is going to hit a refining region, which will curtail demand. So I think part of what's been supporting this is just fear of that storm, strong refinery margins, and strong demand in that particular region. And you know, in pad 2 and pad 3, SPR buying. There's been a bit of that, which we kind of talked about and called for as one of the factors that should buffer any major sell-off. I don't think TI is tight enough to carry the whole world on its shoulders, but there is one tight marginal barrel out there. So the picture is looking kind of mixed, right? Like you have this fairly bearish overall fundamental picture. Even the barrels that trade far ahead, like WAF, those diffs are starting to come off again. Like it's looking bad there.
Yeah.
But you have,
Again, with WAF, you know, I think someone came out to tender a little bit of WAF, and we saw the premiums pick up a little bit.
And then it just came right back.
Right back off. So it feels like we're slowly going into this downward trending market, but we can't expect one-way crash into, you know, strong contango, etc. It's going to be pockets of demand. The market, most of me, hates being short. Like we cannot.
I hate being short. It makes me want to jump out of my skin. I hate it. I don't know what to do.
Yeah,
I'm unpermeable. But
it's incredibly uncomfortable, but everyone is going to be feeling the same way. They don't want to get caught on a short squeeze.
Yeah. I mean, all of the shorts right now are praying to get bailed out by physical. And it's going to end one of two ways. Either all the shorts are going to get squeezed out on some crazy FU rally that no one predicted and doesn't make much sense except from a positioning perspective. Maybe it's driven by TI, maybe it's driven by a play. It's probably just going to happen because of a cascade of unwinds. Or the market's just going to keep leaking lower on general macroeconomic and supply and demand weakness. And then I think the elephant in the room is going to be, let's say that we just keep trending down to $60 a barrel. OPEC may throw in the towel.
Yeah.
They're not going to defend this forever.
Well, that's the other thing, with APPEC especially, a lot of the chat has been on China and their EV market.
Adoption,
so you have to look at OPEC and the East. Is that really going to be the market that, or the area that drives the oil markets in the short to medium term? It doesn't feel like it. I mean, we look at the Dubai curve, the Brent Dubai diffs, etc. It's such a flatlined market right now.
Yeah.
I mean, the diffs are barely moving. We're getting a bit of spread buying, a bit of spread selling. It feels fairly, uninteresting at the minute.
Yeah, Dubai's been oddly outperforming.
Yeah.
Yeah, really mixed bag. It's not clear. I mean, I guess one of the things we're doing right now, you're obviously looking at this too, is we're scooping up back end and sort of medium of the middle of the curve product spreads and product crack rolls and cracks. Just looking for other things to do besides just this pure crude trade, which is starting to look increasingly shaky.
Exactly. As we said last week, something on the curve needs to move. We were thinking crude down, products up, which it kind of has fulfilled itself right the last few days. So I think generally as a company, speaking to some of our desks, exactly, crack rolls are looking increasingly more attractive into next year, right?
Yeah.
So, maybe we should get a little bit more upward momentum on refinery margins. Whether that means we'll get people kind of curtailing the run cuts, I don't know.
Probably doubtful.
Yeah. I think the problem with things like that is it takes quite a lot for refineries to come to the decision to cut runs.
Yep.
It's often not reversed that quickly because it takes so long to get these refineries up and running.
And refiners have been some of the biggest sellers recently.
Yeah.
They're not just going to turn that bus around on a dime. Yeah, you have a
Definitely.
point there.
I mean, especially on crude, we've had some of the big European refiners selling prompt structure, which isn't that usual for them. So it's definitely a sign that we are getting into that run cut territory.
Buckle up. We're going to get some volatility here.
Buckle up, yeah. So, I mean, what's the advice? Long crack rolls and be wary of these short short covering rallies, right?
Yeah, but you can't really be long either.
You can't.
Just have to stay short and finger on the trigger.
Yeah, there we go.
All right.
Cool.
Thank
Catch up
you.
next week.
Absolutely. Nice talking to you.